Welcome back. Here's a look at where markets ended the week and also the month as we closed out the month of February with declines. We got a fresh read on inflation with the latest PCE index showing prices holding steady from December. They dipped slightly year over year, but are still above 2%. Investors are anxiously awaiting the start of new tariffs, 25% on Canada and Mexico, 10% on Canadian energy, and an additional 10% on China, all of which President Trump says will take effect this Tuesday. China, meanwhile, is vowing retaliation. Joining me now is Matson Money founder and CEO Mark Matson. Mark, good to see you. You say you're not concerned about the tariffs coming.
No, I'm not really concerned about the tariffs because I think that Donald Trump is holding all the cards. When you look at the trade between these countries, for example, over 60% of the GDP from Canada comes from America. For Mexico, it's 70%, and from China, it's 30%. So I think I think he's really leveraging this. He's trying to help shut down the borders. He's helping to reduce fentanyl. He's reducing terrorism and in the form of cartels coming into our country with fentanyl. I think he's holding all the cards on this, and I suspect that these countries will capitulate. And the other thing is investors should really be looking at investing internationally. U.S. has been so good for so long, investors have forgotten about the benefits of diversifying. The S&P this year, on the other hand, is relatively flat, while large value international stocks are up about 9% year to date. So a lot of people have missed that, and they're not diversifying their portfolios properly. I think it's a big mistake.
Where specifically internationally?
I think you got to look everywhere. For example, we're in over 20,000 stocks in all of Europe, emerging markets, countries like Egypt, Singapore, Malaysia, all these countries that have great opportunities for growth in the future. And they're great diversifiers with the U.S. Because they have very low correlations with our stock market. I think we want to stay away from countries that really don't have free markets like Russia, but really Asia in general. The better diversified you are as an investor, the better your likelihood of fulfilling on your American dream and having decent returns without getting destroyed in down markets.
All right. I want to get your take on yields. The 10-year yield has been plummeting. We're all the way down to 4.2%. I know Treasury Secretary Scott Bessent has been focused on the 10-year. The Trump administration wants interest rates lower, but there are worries that this decline in the 10-year yield all the way down to 4.2% is indicative of a slowing economy. What do you think is behind the move?
Well, it's typical supply and demand for debt, but here's what it tells me when I look at that. For investors, they have to have high quality, short-term fixed income. And the reason they want to do that, because when we have a crash, and investors have largely forgotten what a crash actually feels like. In 2008 and 2009, tech stocks lost 75%. Large stocks lost 50%. So in the event of something like that happening in the future, you have to stress test your portfolio, and then you have to have high quality short-term fixed income. 10 years and out's not going to cut it because those things are highly volatile. And when markets crash, they tend to crash also. Then if the market crashes, you rebalance, sell your fixed income, rebalance your portfolio. It sounds simple, but it's one of the hardest things for investors to actually do. And don't go out chasing long bonds. Big mistake. They call them high yield bonds. What they really are, Maria, is junk bonds. Don't chase that. It's very dangerous as an investor.
But in terms of the reason that yields have dropped so much, some people say it's because of a slowing economy. There was a report from the Lindsay Group which asked the question, can Doge induce a recession? How do you see this in terms of the reason behind these yields have moved lower?
Yeah, I think inflation has come down. You mentioned that earlier in the show. Interest rates largely move with inflation. Inflation has cooled a lot over the last couple of years. And I think this idea that the reducing corporate government bloat, cutting out all this waste is somehow going to cause a recession. I think that's just insanity. Okay. And lower interest rates point to the fact that investors should be looking even more to equities because historically equities have beaten short-term fixed income by about 9 to 10% per year. Look, global interest rates are coming down, not just in the United States. So I don't think it signals anything about a slowing of our economy.
All right, we will leave it there. Mark, great to catch up. Thanks so much.
Pleasure. Thanks a lot, Maria.